Global markets in turmoil, trade wars, AI boom, and record-high gold prices. What's really going on? The world of finance is buzzing with activity as Asia's stock markets join Wall Street's rally, while gold reaches an all-time high amid escalating trade tensions. But here's where it gets controversial. Is this a sign of economic resilience or a harbinger of deeper instability? Let's dive in. On a rainy day in Tokyo, women clutching umbrellas stood outside a brokerage firm, their eyes fixed on a stock quotation board, a scene that perfectly captures the mix of uncertainty and opportunity in today's markets. As of June 30th, 2025, the financial landscape is anything but dull. Markets divide, AI optimism versus trade angst. Equity markets are soaring, fueled by hopes in artificial intelligence, AI, and robust earnings from Wall Street banks. Yet, simmering trade tensions between the US and China are pushing investors towards safe haven assets like gold and the Japanese yen. Gold, in particular, has shattered records, hitting an unprecedented $4,234.41 per ounce as investors seek shelter from the storm. Meanwhile, the US dollar continues its downward slide, dropping 0.2% against major currencies for the third consecutive session. Oil rebounds. But at what cost? Crude oil prices have rebounded from 5-month lows, thanks to U.S. President Donald Trump's announcement that India will halt oil imports from Russia. This move is part of a broader strategy to cut off Moscow's energy revenues and pressure Russia into negotiating a peace deal in Ukraine. But this is the part most people miss. While oil prices rise, the geopolitical implications of such maneuvers could have far-reaching consequences. Are we witnessing a strategic masterstroke or a risky gamble? Asia's stock rally, a closer look. Across Asia, stocks are on the rise. Japan's Nikkei advanced 0.8%, boosted by chip and AI-related shares. Taiwan's benchmark index climbed 1.4%. South Korea's KOSPI jumped 1.8%. And Australia's equity benchmark added 1.1%, with all three reaching lifetime highs. Taiwanese chipmaker TSMC is set to report earnings later today, following Dutch chip-making tool manufacturer ASML's impressive third-quarter results driven by booming AI investment. The trade war simmering or boiling over? Trump's declaration that the U.S. is in a trade war with China has sent shockwaves through the markets. While this isn't news to many, the ongoing brinkmanship between the two superpowers keeps investors on edge. U.S. Treasury Secretary Scott Bessent offered a glimmer of hope, suggesting an extension of the current tariff reprieve and a potential meeting between Trump and Chinese leader Xi Jinping later this month. Yet Kyle Rada, senior financial markets analyst at Capital.com, warns it will only simmer down completely when the Chinese back off the threat of rare earth export curbs and the U.S. reverses the tariff hike to 100% slated for November 1st. Until then, trepidation will remain in the markets. The bigger question, where do we go from here? As markets navigate this complex landscape, one thing is clear. The interplay between technological innovation, geopolitical tensions, and economic policy will shape the future. But here's a thought-provoking question for you. Are we placing too much faith in AI and safe haven assets? Or is this the new normal in an increasingly uncertain world? Share your thoughts in the comments. We'd love to hear your take on this ever-evolving financial drama.